Hey guys, welcome back. Thanks for tuning in. In early June 2025, Australian consumer confidence saw a slight improvement, according to the Westpac-Melbourne Institute Consumer Sentiment Index, which rose from 92.1 in May to 92.6 in June. This marginal uptick is noteworthy, but still reflects an overall mood of cautious pessimism among consumers. The current sentiment illustrates a delicate balance between emerging positives, such as the Reserve Bank of Australia's interest rate cuts and easing inflation, and lingering concerns, including global trade tensions, particularly U.S. tariffs, uncertainty around broader economic growth, and a softening labor market. This cautious pessimism shows that while consumers are not overly optimistic, they are also not plunging into deep despair. They remain in a state of watchful waiting, looking for clearer signals before making major spending or financial decisions. This sets the stage for exploring the complex interplay of economic forces shaping today's consumer behavior. As we delve into the latest consumer confidence data, it's important to understand its implications for individuals, businesses, and policymakers. By analyzing the key drivers of consumer sentiment and their potential consequences, we can gain insight into the path forward for the Australian economy. This video is for educational purposes only. It should not be considered investment, legal, or financial advice. It is not an offer to buy or sell any security. Past performance does not indicate future results. Investing is risky. Understanding the pulse of Australian consumers before diving into the recent data, it's crucial to grasp the fundamentals of consumer sentiment and why it matters. At its core, consumer confidence reflects how optimistic or pessimistic individuals are about the economy, both broadly and in their own lives. A confident consumer is more likely to spend, viewing purchases as worthwhile investments or necessities. Conversely, when confidence drops, consumers tighten their belts, cutting back on non-essentials and focusing on saving. Now let's delve into the Westpac-Melbourne Institute Consumer Sentiment Index, a key measure of Australian consumer sentiment. This index is derived from monthly surveys of approximately 1,200 consumers, gauging their perceptions of the economy and their personal finances. The June 2025 results show a slight increase, with the index rising to 92.6 from 92.1 in May. But despite this minor uptick, the overall sentiment remains in cautious pessimism, with pessimists still dominating. Now, let's examine the index's subcomponents to understand the nuances of consumer sentiment. The first subindex gauges whether it's a good time to buy major household items. This metric jumped by 7.5% to 100.2 in June, marking the first time it has crossed above 100 since March 2022. This signals improving sentiment about household purchases, likely driven by receding cost of living pressures and expectations of lower interest rates. The next two subindices measured households' assessment of their past and future financial conditions. How do you think your family's financial position compares with 12 months ago? Subindex inched up by 0.5% to 75.4, though technically above 50. This remains relatively weak compared to early 2023 levels, suggesting many households still feel financially constrained. Similarly, the how do you think your family's financial position will be in 12 months' time? Subindex dipped slightly by 1.9% to 98.8, marking the first negative reading since October last year. This decline points to persistent worries about future finances despite recent rate cut optimism. The final two subindices focused on the broader economy over the next 12 months and 5 years. These declined slightly to 82.4 and 96.2 respectively, remaining slightly above their respective historical averages, but struggling to sustain gains from earlier in 2023. This indicates lingering uncertainty about the economy's trajectory. Notably, consumers' view of the 5-year outlook has remained muted compared to historical averages, suggesting a lack of confidence in the durability of economic growth. Subindices tracking unemployment and house price expectations also saw notable movements. Do you think the unemployment situation will improve or worsen over the next 12 months? Subindex rose 5% to 127.4. Readings above 100 signal expectations of worsening unemployment, and this marks the highest level since July 2023, suggesting growing anxieties about job security. Finally, do you think the price of dwellings will improve or worsen over the next 12 months? Subindex saw a sharp increase, surging 7% to 166.5. This marked the highest level since 2030, with more than 3/4 of respondents expecting house prices to rise. These insights highlight the dynamic interplay of economic factors influencing consumer sentiment. Now, let's discuss the significance of these findings for the broader economy. Shifts in consumer confidence often foreshadow changes in spending patterns, which account for a substantial portion of economic activity. The recent increase in the Westpac-Melbourne Institute Consumer Sentiment Index suggests a potential uplift in household spending, which could boost economic growth. However, it's important to recognize that sentiment and spending are not perfectly correlated. Other factors such as income, employment, and asset values also play crucial roles. For instance, while the Subindex measuring intentions to buy major household items has improved, other metrics related to personal finances remain subdued. This suggests that consumers may still be cautious about larger purchases despite some optimism about the economy. Moreover, the RBA closely monitors consumer confidence as an indicator of aggregate demand. The central bank uses this information to assess the effectiveness of monetary policy and gauge the outlook for inflation. The recent rate cuts appear to have bolstered sentiment, but the RBA will likely remain vigilant, monitoring broader economic conditions to determine the appropriate policy response. Despite cautious optimism regarding the economy and housing market, consumers continue to favor low-risk financial products such as bank deposits and debt repayment. This trend reflects a desire for security and income stability, particularly in an environment of ongoing economic uncertainty. Such risk aversion can also influence broader financial markets. For example, if investors perceive waning appetite for equities among retail investors, it could potentially impact stock valuations. In conclusion, the Westpac-Melbourne Institute Consumer Sentiment Index provides a valuable snapshot of Australian consumer sentiment and outlook. While there are tentative signs of improvement, lingering concerns about household finances and the broader economy persist. As economic conditions continue to evolve, monitoring consumer sentiment will remain crucial for understanding shifts in spending patterns, inflation, expectations, and the effectiveness of monetary policy. The delicate balance between emerging positives and ongoing challenges underscores the need for both consumers and policymakers to navigate the current landscape with vigilance and adaptability. That wraps up our review of the latest Australian consumer sentiment data. If you found this video helpful, please leave a like. If you have any questions, feel free to comment below. And don't forget to subscribe for more insightful content. Thanks for watching.